If you follow any sort of financial news, you've probably heard of two things over the last week. The first is the economic problems that are currently taking place in China. And the second is shadow banking. So what I want to do in this video is first and foremost explain to you exactly what shadow banking is so you have a better understanding, because you need to understand how this works in order to understand how it is interrelated with the financial problems that are currently taking place in China. So I have my trusty whiteboard out. Please excuse my awful penmanship. I will do my absolute best to keep it simple so you can follow along. As always, my name is Derek and I got my degree in finance, so you don't have to. Let's break down what shadow banking is, and then let's explain how it's interrelated to the financial crisis that is currently developing in China. All right, let's get right into it. So first and foremost, you and I know that there is a regular banking system, which this square is going to represent. We're going to put a B there for banking. The way that this system works is it receives deposits from you and I, right? When we deposit our money in the bank, they receive deposits and they pay us a very measly percentage in return, sometimes 1%, maybe a little more with a high yield savings account. They then lend money to other people. People who are trying to buy a house, people who are trying to buy a car. These are mortgages and car loans and many other various loans. The thing about the regular banking system is that there is usually a safety net underneath it. Right? In the United States, this is known as the FDIC. There are also certain regulatory requirements that the regular banking system has to abide by, like liquidity requirements, so it has enough money on hand to hopefully stop things like bank runs. The point that you have to understand is that the regular banking industry, in most instances, in most countries, is very regulated. On the other hand, you have what is known as shadow banking. All right, this is an entire other sector of the banking industry. And it's kind of called that because it kind of happens in the shadow. It is unregulated for the most part. Now, the reason it is unregulated for the most part is because the shadow banking sector take place with lenders that are not actually banks. All right. So these institutions do the exact same thing that banks do. Right. They lend money to people like you and I who are trying to get loans for mortgages, for cars, etc., credit cards, etc. The difference is how the money comes in. So in a regular bank, depositors like you and I deposit money and that money is loaned. In this instance, they are more of investments. So you have trust funds, you have mutual funds, you have ETFs, you have all sorts of funds that are investing in here. You have hedge funds, etc. These funds, we're going to put F for funds of all different sorts. And in some countries, because they're unregulated, you can have what is known as unsophisticated investors investing in these also. That means people like you and I. In the United States, there are some more regulatory requirements. The point is, this money comes in. The exact same thing happens. It is lent out to people who are buying cars, mortgages, etc. But instead of paying a small interest rate, they sell bonds to investors. Okay? So, and usually these two are very similar. Okay? So money comes in, these people want a return. What you have is you have different tranches of bonds. You have A bonds, you have B bonds, and you have C bonds, and these are usually paid out in order, and the percentage rate gets smaller. So these might receive 3%, these might receive 5%, and these might receive 10%, because in the event of a collapse, these will be paid out first, these second, these third. So the more risk, the more return. The problem is there is no safety net under shadow banking. A safety net does not exist. All right. So in the event of a bank collapse, you have a safety net in the form of the government. In shadow banking, you do not have a safety net in the form of the government. So this right here might look familiar because something very similar happened in 2008. Okay. We're gonna start to see similarities here as I progress through this video. In 2008, you had something very similar. You had mortgage borrowers who were not qualified. They were not qualified to take on the mortgage that they were given. Those mortgage borrowers started to default. This exact same thing was going on in the mortgage industry. You had different tranches, A, B, and C. And what ended up happening is as mortgage borrowers were unable to pay, the money supply in reverse, right? Because there's a money supply this way and there's a money supply this way. The money supply back to investors and the funds started to dry up. So, in order of seniority, the bonds started to fail. So, first the C bonds started to fail, then the B bonds, and then the A bonds. So, 2008 has some very similar things that we can pull from as we start to talk about what's going on currently in China. Now, before I move forward, you need to understand a couple things. One, the Chinese GDP, the total economic output of China, 30% of that is tied directly to real estate. That's $1 in $3 of their GDP is tied directly to their real estate industry. We usually think of China, we think of labor output, and we think of production of goods that it exports to other countries. And that is true. But a huge portion of their economic growth and their economic machine is tied to real estate and in-country real estate. That means their own real estate in their own country. I made a video just a couple days ago about the real estate crisis with Evergrande and Country Garden. And this is all tied into that. So after this video, I would definitely recommend checking out that video. That kind of explains more how this came to be. The point is a huge portion of their GDP is tied to real estate. Now, there is a similarity between companies like Evergrande and Country Garden and up to 50 others who have started to default on their bond payments. These people, these real estate, we're going to call them real estate developers, they're very similar to the mortgage borrowers in 2008. Because of my last video and what's going on, I explained that, these real estate developers are starting to not be able to pay their payments. Some of their payments are tied to the regular banking sector. That's fine. There's usually a safety net under there. Some of their loans are tied to the shadow banking sector. This is what's scary, okay? And this is what I guess could cause a snowball into the rest of the economy for China and the world. Right? When these people, the real estate developers, stop paying their loans, the exact same scenario can happen. The C bonds, then the B bonds, and then the A bonds will fail. And the reverse money supply back to investors, who in China's case can very much be people like you and I. That is why you are seeing protests, right? We are seeing protests in Beijing at the offices of some of these investment firms because people are not getting paid, because some of these shadow banking firms, excuse me if I butcher this name, these are one-taked, all right? So if I mess up, I'm sorry, but I believe it's called Zhongwang, okay? They did not pay one of their bond payments. So these protesters are protesting at their headquarters. So you're already starting to see a breakdown of this section right here. So the big concern is pretty much that, remember, the way the economy grows is that money is lent to mortgage borrowers and real estate developers and all kinds of other people, right? The economy grows, and then these people return payment, and the investors and the funds get paid, and the whole process repeats itself. That is why there are usually safeguards in place to stop a major scenario like this happening. The problem in China is that because there is no safety net under their shadow banking sector, and if these people stop paying, you could get a very similar situation that happened in 2008. Now here's the difference. I'm not calling for doom and gloom at all. I do not think that China's economy is going to explode or implode. In the United States in 2008, there were trillions upon trillions of dollars of mortgages. In China, the Chinese shadow banking industry is worth about $3 trillion. There's not a lot of info on this because it's not really regulated, but most estimates put it between $3 and $5 trillion. That's still a lot of money. But not all of this is tied directly to real estate. We can assume that maybe 30% is, okay? So that's anywhere from $1 to $1.5 trillion. Still a huge portion. What starts to worry economists and why people who are trying to look into the future a year, 2 years, what starts to worry people is this thing known as contagion. So what ends up happening in this scenario is when you have the money flow going, the reverse money flow going back to funds and investment firms and the shadow banking industry in general, when that starts to dry up, okay, when this starts to dry up, these things stop paying. When these things stop paying, these people do not get paid. That is a two-pronged problem. One, they do not have money to then reinvest in the economy. And two, they are not going to continue investing in these types of assets, because if you see an asset losing money, you're not going to invest more money. So what ends up happening is the shadow banking industry can start drying up. Their funding can start drying up. And when it is estimated that anywhere from, sometimes it's estimated that more, but we're just going to say one half, okay? 50% of funding is coming from shadow banking. That means that you could have 50% of funding basically disappear if the shadow banking industry goes bust. So that is, I guess, what everyone's concern is, because at that point, remember, these institutions are not just loaning money to the real estate sector. They're also loaning money to every other sector of China's economy. All right? So just like the regular bank that accounts for the other half, the regular banking sector and the shadow banking sector work together, and they loan money to other ventures in the economy. So if 50% of that funding dries up, you're basically cutting available funding in half. So even if it is not real estate related, all right, we're talking production, we're talking agriculture, we're talking tech. Those people look for funding too. And when funding becomes more scarce, what happens to the economy? The economy shrinks. We understand that because it happens, that's how the Fed in the United States controls the economy. They pump money into the economy, it grows, but it also risks inflation. They hold money back from the economy, or they shrink the money supply, and while that does usually bring down inflation, it also causes economic shrinkage. This is the exact same thing, just with different institutions and different players. When you have less money available in the economy, usually economies shrink. When you have more money available in the economy, usually economies grow. So if you have problems in the shadow banking sector, one, real estate accounts for 30% of all GDP. Not only that, but 70% of all wealth in China is held in real estate. Okay? That is double what is held in the United States. So a lot of wealth is held in real estate as well. But even ignoring this completely, okay, the major risk is contagion into other parts of the economy because funding dried up. Now, let's talk about the West, okay? Let's talk about the West, because if you are watching this video, presumably you are living in the West. Will the West be directly affected? Directly? No. No, I don't think so. The most that the West has invested in shadow banking and in real estate, in Chinese real estate in general, is less than $500 billion, more like 500 million. There are a few. It's estimated that $300 to $500 million is directly invested into Chinese real estate, so less than $1 billion. Right? When you look at the the U.S. GDP, that is like less than 1%. So the West will not be directly affected by what is going on. Now, with that said, China is the second largest economy on the planet. And if you think of the global economy like a car, all right, you have the front two tires, which are the United States economy and China, leading the charge. And then you have other economies, which make up the other two tires. You have the Western economy, the European Union, etc., and then you have developing countries. These economies are interconnected, some more than others. But think of the U.S. economy like a tire. If China, the other front tire, because it is the second largest economy in the world, if that blows a flat, gets a nail, etc., the U.S. economy, which is the other front tire, will not be directly affected, right? But will it still cause the vehicle, which is the global economy, to pull over? Will it still cause the global economy to slow down? Yes, it will, because China is a huge part of the global economy. And at this point, it is interconnected and globally required for the global economy to work. So if you have a blowout on one of the four tires that run the economy, the global economy, you're going to have problems. So that is why economists, something's happening overseas, you almost don't even think about it. But economists, people who study this on a day-to-day basis, they care and they are worried precisely because of contagion and because of how interconnected everything is, and how the shadow banking industry can fail because of the reliance on real estate loans. And when that fails, funding for other ventures in the economy, like tech, like agriculture, like production of goods, that funding starts to dry up and you have a shrinkage. Now, China may miss its 5% GDP growth target. There's a very likely chance that it will miss that. Now, does that mean that China is failing or shrinking. No, it does not. But it is a sign. When you have growth targets and you miss those growth targets, it means that something unexpected or unplanned for went wrong, because these targets are created and predicted by huge firms, by people with access to tons of data, and probably at this point in life, artificial intelligence. So when they miss targets, it means something. It's not just, oh, well, they missed the 5% target, but they're still growing. Absolutely. But why did they miss it? That is the question, and it might have something to do with this. China is an economy, like any other economy. It is an economy just like the United States, just like the European Union, and just like every other country on this planet. It is a very, very strong one. And it has a lot of benefits going its way. With that said, like any economy, it can face periods of shrinkage, it can face periods of economic recession, and it can face periods of hardship. So let's realize that China is not invincible, just like the United States is. And just like the United States had its 2008 moment, China could have that in 2023. Do I think it will? No, I think there will be safeguards in place, and I do think eventually the Chinese government will step in if this gets out of hand. With that said, they did say that they will not bail out any companies. They said that. The Chinese government said that. They said they will not bail out any companies in the real estate sector. We'll see if that holds true as Country Garden approaches its September 5th deadline, which is its grace period, to pay its bond payment that it already technically defaulted on. It has 30 days to basically the grace, just like you and I have a grace period. It has 30 days to make that payment. We'll see if that happens, and we'll see as that approaches, which happens on September 5th, as this approaches, will the government step in and do anything? Country Garden is huge. Evergrande already filed for bankruptcy. So this is what's going on. I'm not calling for doom and gloom, all right? But it's something that we need to be aware of, because no matter where you are in the world, everything's interconnected. Right? And things that happen in China can and will affect other countries, period. Because China is a huge economy. And the larger the economy, the more it affects the world. That is why the saying exists that the US coughs, the rest of the world catches a cold. It's because of how heavily reliant we are on the US economy. China is becoming the second largest economy and has been for a while, so a lot of countries rely on it. So if it has problems, other countries will. Usually, the analogy I use is like an earthquake. The closer to the epicenter, the more problems those companies will have. So countries that are very heavily reliant on Chinese infrastructure, usually other Asian countries, will have major problems. As you move further west, you'll have less and less of an effect. But you still can get contagion. You still can get contagion, and any major economy that's struggling is going to cause problems for the rest of the world. So I hope this was informative. I hope my piss poor, awful, terrible penmanship did not stop you from learning something. I hope I was able to teach you. As always, my name is Derek. I did get my degree in finance, so you don't have to. I love this stuff. It's been my passion for over a decade, and I love being able to share it with you. So if you like personal finance, if you like economics, and if you like world finance broken down, then you are in the right place. I like to just have conversations with you. Like you saw, this was one taked. So if I made a mistake, please bear with me. I do extensive research before I put these videos together, but I can still make a mistake. I'm still human. So if you catch it, let me know in the comments. If I catch it, I will pin it in the comments. And then if you disagree with me or you have a different opinion than I do, I love that. I think that that is what keeps things moving forward, and differing point of views are very, very important. So if you have a different viewpoint or differing opinion, please let me know in the comments. I don't think there's anything wrong with that. I'm not God. I do not have a magic 8-ball. All I can do is pull from my experience and from my degree and try to share something with you guys, so hopefully you learn something. But I am in no ways, I do not have a chip on my shoulder, and I do not think I know it all, because I fucking don't. So if you have a different opinion, let me know in the comments. Hopefully this was helpful. We usually do videos here on Tuesdays and sometimes Fridays, Thursdays, depending on if there's a major event taking place. But Tuesdays is the day that you can expect a new video. If you haven't subscribed yet, please consider doing so. It helps the channel a lot, and it'll help you learn a thing or two. And turn on the bell notification so you don't miss the next video. I love you guys. I love this stuff. I love being able to share it with all you all, and I will see you in the next video.